Alrighty, folks, according to Redfin, the housing market has completely flipped. We have gone from a market dominated by a seller's market to now a buyer's market. In fact, they are saying there's 500,000 more sellers than buyers. They are talking housing crash, prices dropping. We're going to have a conversation with Anna Kelly and figure out what's the reality. Anna, how you doing this morning?
I'm doing great. Good to be here with you.
Absolutely. By chance, did you see this article or heard rumblings of it? I can go ahead and bring it up, but
I did. Yeah, I'd say go ahead and, the key points. I think it talked about, top 10 major cities where there's declines, if that's the right article. And, generally speaking, showing the difference in supply and the demand in terms of how many buyers, how many sellers. So, yes, at a high level, I've looked at it. And it's definitely, a trend that's showing us a whole lot more sellers than there are buyers. That hasn't always been signs necessarily that there's going to be a housing crash. It's a possibility, but I don't think it's a far gone conclusion yet that prices are just going to drop everywhere. Maybe prices of homes that are on the market, certain sizes, certain cities where there's just buyers that are tapped out. But I think there might be a little more fear than necessary at this point.
Yeah, so what I went ahead and did, hopefully StreamYard is cooperating, is I pulled up the actual Redfin article. Really wanted to focus on this chart, right, where the blue lines are the buyers and the reds are the sellers. And basically saying we're at a point where, the gap between sellers and buyers is, the largest on record, right? Roughly speaking, 500,000 more sellers than buyers. And again, if everything was equal, you're probably right? Supply demand, you have 500,000 more sellers than buyers, prices have to go down, right? That's just how, economics 101 works. Unfortunately, as I've said for years and you've said for years, the housing market is broken. And, this is just another example of this. So what I would tell people is you have to step back a little bit. And thankfully, we've been talking about it on the channel for about 6 months. And what we are seeing across the country is above the median is starting to stack up in a big way. We've talked with Adrian Hernandez in Orange County, where above 2.5 million, which is luxury for them, is now 300 days on market.
Yeah.
Right. Lots of opportunity there. But if you're shopping in the below 800, which for him is entry level, there's almost nothing available. Same thing in King County, same thing Seattle, same thing in the Silicon Valley. So I think people are missing this. There are more sellers than buyers, no question. But the housing market is broken. If you just stratify into 3 chunks, below the median, median times 2, and then above that for luxury or ultra luxury, they're all 3 are very different markets. And the reality is we could see, and I think we will see, significant price cuts in luxury properties. Folks, it would not be uncommon to see 100,000, 200,000,
sure,
300,000. But to think that that's coming to entry-level housing is insane, in my opinion.
I agree with you completely. And that's what I was kind of alluding to, like, higher end homes. And the other thing I think that article touched on, which I have a lot of experience with actually, because I own so many properties in the South, is, condos in Florida, for example. So Florida has a bigger gap in buyers and sellers than ever historically. And there's just a slew of home listings, but a significant number of those are condominiums. And so, you've got the condominium market, which is hit hard by insurance and regulatory changes after that condo collapse that was terrible in Miami. Condo owners in Florida are being hit with hundreds of thousands of dollars of assessments to bring their condo buildings up to current standard and code over the next few years. And so you've got a lot of forced sellers because of things like natural disasters, all the hurricanes, these legislative things. And quite frankly, even outside of areas like Florida, in the South, insurance costs and taxes have gone up significantly. And so, you almost have to bifurcate. And we've talked a lot about real estate being very hyper local. It's very different. So while you do have real estate cycles about every 18 years or so where broadly across the country, you've either got a peak or a trough, basically housing boom or housing bust. This is not really like that because these cycles are a little broken, to your point, based on historical. So you really have to zoom in, don't just take the headline and say, oh, it's either good or bad, depending on if you're a buyer or the seller. You have to say, again, what's that price difference, like you said? But I think we also need to say, what region is it? And then the other thing is how many homes that are listed are actually people that bought second homes to Airbnb. And so you've got some very type specific markets that were turned into these short-term rentals in residential neighborhoods where they're not allowing it anymore, or where people are going, why would I travel to Sarasota and rent an Airbnb 30 minutes from the beach? If I'm going to afford to travel to Sarasota, I'm going to buy the one on the ocean. So you have a ton of single family homes that look like it's just a bunch of sellers in a neighborhood putting their house on the market. When I zoom in and actually look, especially in areas like Pigeon Forge, Gatlinburg, Tennessee, areas like Florida, you see a lot of homes that are actually furnished and they're second homes. They were short-term rentals that people are trying to sell. So you're going to have certain homes that are going to definitely have big price corrections, at least while interest rates are high and the buyers that can't afford to make those payments are just not going to buy, or they're going to demand a much lower price, which brings prices down. But it's not across the board, to your point.
Yeah, not across the board, not at all price points, not in all regions. The other thing that I think is really interesting, again, we've been talking about it all of 2025, is the year of the investor, right? Again, if you just step back and simply look at the game on the field, what do we want as investors? We want more options.
Yeah.
We want less competition. And we would like it to be easier to find motivated sellers. Hello, we're here.
Yeah. Jinx, you owe me a soda.
There you go. I'll send it to you. Yeah, but this is like the perfect time. But again, what I want investors to realize is it's time to do the work, right?
Yes.
Even below the median, if you do the work and write enough offers and have enough conversations and get creative, you can find an amazing deal. And I'll tell you a story. Cody Davis, he's a young man in the Seattle area. I think he's like 22 or 23. He's really young. He just locked up a sixplex that was on the market for 100 days. He got it for something like 20 grand below list, which we'll call it 10%. He got six during inspections. He got another something like $10,000 credit. Then he went back and got a seller second for 15%. So he only brings in 10%. The bank allows a second up to 15%. And really what he found is just an ugly building, but he's going to take that 6 units and make it 9. It used to be a motel. It was just configured poorly. He's going to add a couple of walls, and bingo, bango, he's got 9 units. And, the NOI on it is going to go from something like, 65. All right. What did he say? I think 3,500 a month to like 4,900 a month, something like that. And it's just easy stuff. But again, it was on market. Nobody was looking, got some seller credits, got some seller second. And this is the time. This is the opportunity, right? Go look for the ugly ducklings, look for the tired landlords, look for the overlooked asset, and make disrespectful offers and just see what happens.
Absolutely. Yeah. I think 2 key things that you said there, or maybe 3. First is we're always looking for motivated sellers. Well, we have extremely motivated sellers in these certain segments where they're just sitting a long time, because the reality is, and I don't remember the exact stat, but we talked about it on this show when we were talking about the percentages of homes that are owned by people that are, baby boomer ages plus. It's a significant percentage. And of those, about 80% have already redone or remodeled their home to stay in them. And they have interest rates that are extremely low, sub 4, and in many cases, sub 3. And so you've got a lot of homeowners who have these bigger homes who are locked in and they're not going to move. And so the ones that are selling, especially if they're in that, well above medium home price, they don't have a whole lot of buyers, and they're only selling because they need to in general, because most of them otherwise would just tap their equity. They're sitting on a lot of equity and they would just, keep the home. So those homes that are listed generally are motivated. And the same for multifamily, or commercial assets. Most of them are just going to sit on them and cash flow. they're only going to sell them if they're motivated because they have to sell. And a lot of times it's because those commercial loans are coming due for a mortgage rate reset. And they know if they don't sell them, they can't get the bumps high enough for a much higher interest rate. So you've got this time like almost no other in the last couple of years where you've got a lot of motivated sellers. And that means you can see lots of listed properties. You don't have to spend $10,000 a month marketing for off-market deals. They're there. They're like handed to you. So just call and make those offers. And then, you know, the other thing is the competition, even though ironically, and you and I've talked about this so much. Why do we talk about the economy? To warn you about what could come so you know what your mindset should be and what to expect. We've been saying, Michael, what happens when you truly have a housing recession like we do now in terms of transactions is that eventually people kind of give up and they get scared and they think real estate doesn't work. I can't make money doing it. Can't make things cash flow, can't make things pencil. So investors leave in droves. They just give up. And so right now, not only do you have more motivation, but you have much, much, much less competition. Even house flippers, house wholesalers, wholetalers, they're leaving in droves. Realtors are leaving in droves. And so you've got less people making those disrespectful offers on more properties available to make the disrespected offers. And that gives you an edge. And then the third thing is, if you do the work, you just have to start asking yourself, how can I? Like, maybe they don't accept it the first time. Maybe they don't take, 20% below ask. Maybe they're offended by seller financing. But you have to say, okay, if this deal doesn't work and the seller's motivated and it's been sitting, how can I make it work? What do I need? And then you play with the financing, owner financing. Like you mentioned, this young kid, get the seller to hold a second. And so it doesn't always have to be price. So this is the time, if you do the work and you get creative, there are so many houses in those markets that if you have the wherewithal to buy them, you make money on the buy, get them at well below what they're worth, figure out how to finance them so that they cash flow. Then you just have to have a little bit longer term perspective to say, okay, what if Redfin's right and we do have a housing crash and the values do go down further? As long as you're cash flowing on it and you've got a good deal today, then you just hold it long enough that eventually all the value corrections tend to, correct themselves the opposite way, and you end up gaining appreciation over the long term. So it's a great time to be an investor. It really is. As long as your mindset's in the right place and you know that it's a good time instead of worrying about a crash.
Yeah, the last thing I'll say on this, and we'll wrap up this topic, is when I think about there being more sellers than buyers, the one variable that I know is in there, but it's hard to calculate, is what I've always called wish pricing, right? And people will know this when they look at their buy box or their market, right? There's a seller out there. They listed their property. They think it's worth 2022 prices. They've had no price drops, and it's 103 days. That is a classic sign of wish pricing. Basically, what they're saying is, hey, I'm going to stay here unless I get a stupid offer.
Yeah.
Right. And, I don't know what the percentage is. Is it 5%? Is it 15? Is it 35? But some percent of these sellers, which again is making that gap artificially high, are nothing more than wish pricing. And those will just eventually roll off the market because there'll be no activity and the listing contract will expire. So, I don't know if you agree or not, but there's got to be some wish pricing in those listings, you think?
Absolutely. Yeah. And hey, I was one of those wish pricing sellers. I mean, I had a property that I bought and I have a couple of ocean fronts in Florida. I put one of them on the market about 2 years ago, let's say, ballpark. Set on the market. I got a lot of disrespectful, stupid offers. And I said no, because I didn't have to sell. And I just held. And eventually I lowered a little bit, but I knew that it was still well below replacement cost and what it was really worth to me as an investor. And I had a great interest rate on it. So I didn't sell it. I pulled it off the market. Well, guess what? I've got 3 sellers in that same condo building now, and they're getting to the point of desperation. They're drastically cutting prices. I might go buy myself a second one in that building if the price gets good enough that I can weather increase in insurance costs and taxes and those kind of things. And so there's definitely that. And I think it would be a really cool project, although I'm not the one to do it because I'm not the AI tech, but I bet you could go to tell AI, Claude, or I at least know what they're called, right? ChatGPT, go out and say, go find all these listings in this area, this price range, this area, and see how many have had price drops and how far the price drops are, how fast. And if you haven't had many price drops in 6 months, you know that is the group that's they're tire kickers, right?
Yeah,
If they're
exactly.
drastically cutting their costs, I've seen a few recently that cut 10, 5, over 6, 8 months, and now all of a
Yeah.
sudden it's like cut 200,000. Hello, I'm making an offer on that one.
Yeah, it's really interesting. Yeah, again, if somebody wanted to do that, I probably would say on the market more than 100 days and had less than a 3% price drop. And
Yeah,
ideally 0, right? That would
right.
probably where I'd start, but certainly less than 3%. That's just wish pricing. Sometimes you'll see people lower prices less than 1% just so it restarts the clock.
Absolutely.
It's a game they play.
Absolutely.
So if somebody wants to do that, I'd love to know the answer. Let us know in the comments. Anna, this is always fun talking to you. Where can people find you?
Great. You can find me on social media at Anna Kelly REI Mom. And for real estate coaching, consulting, and wealth review of your portfolio, you can reach out to me and schedule an appointment at AnnaKellyInvesting.com.
Thank you so much.